Everyone, here we are with ticker symbol AMD, Advanced Micro Devices Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's see what's going on here. So, most important number here is 8206. That has not been broken through, and this stock was very volatile in an up and down direction, but it actually kind of just lifted, fell back down, and leveled off back in the same area and range that it was earlier in the week. So AMD is not working its way up, nor it's working its way down right now. But one thing I have noticed is that every time the bulls reappear, right, the bears are trying to bring this back down. So I'm going to take away all these lines so nobody gets confused here. I don't want to get anybody confused, but what I'm just saying is it actually has been in a sideways movement and direction. So that's very interesting to see and to realize that the chart has been doing that. It did it here again. It actually was a little bit lower here and it's a little bit higher, but when you look at the whole entire perspective is, yeah, it ran up and then it ends up back down close to where it started. Ran up, back down to where close to where it started. Before that, it was in these runs, but very volatile for the last month as well and in downward direction. And then now it had a slight recovery and now it's in a sideways movement. So the question is, could the bulls gain control here to bring this one up, or are the bears going to dominate this and bring it down to newer lows? Obviously, they touched this support level twice, and we're going to look at it right now in a more zoomed in portion of how important this support level is, and also this resistance level. This resistance level is the highest point in the last couple hours of the day, and we're going to look at what's important for the position of where we're at in this chart. So 83.16 is where we're at in bearish territory. We're below the 50-day moving average. The 50-day moving average is 83.42. Once 83.42 gets broken through, we're back into bullish territory, but for the bulls to build any momentum and move further away from the 50-day moving average in an upward direction, they need a breakthrough. 83.65, break through it, turn it into a support, and start to work their way up to newer highs and newer resistance levels. So super important for the bulls to go ahead and accomplish that. If they can break through 83.65 and turn it into a support and break away from it, then they're on their way back into bullish territory by crossing the 50-day moving average and confirming that they're having some leverage and momentum to continue to work their way up. On the other hand, we have what the bears want, and the bears are actually slightly gaining more control right now in this tug of war due to the fact that we're below the 50-day moving average, and this support level, if it gets crossed, this could start to test newer lows and quickly try its best to reach down here at 82.05, 82.03 range, right? And if they break through this, they will do their best to reach those lows. So if this crosses below $82 flat, this will see newer lows and newer support levels. But right now, before getting to any of those numbers, the first support level right now, which was touched 2 times, is 82.41. If that gets broken through, this could be on its way to newer lows. And I want to emphasize to all investors, pay very close attention to the behavior of this stock and how it's acting if it crosses 82.41, and how quickly is it moving to newer lows, because it's already in bearish territory, and by breaking through 82.41, this is getting further away from the 50-day moving average in a downward direction. As always, I hope that with these cues you guys are well equipped for the next trading day to go ahead and make your decisions based off of your due diligence and rationalization of the charts. And if you feel encouraged and inclined to subscribe, you're more than welcome to. And don't forget to click on the bell. By clicking on the bell, you turn on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.